Welcome to Stockradar Stocks on the Move for another week. Today's date, the 10th of August 2023. My name is Richard Lee and I'm manager Stockradar.com.au website for you. Okay, plenty of opportunities now, but looking down the track, there are some interesting chart developments we should be mindful of. Perspective is always key when markets have little fractures, and we look for anything to give us a clue. Should you stand back and let it happen and don't look for something that's not there? Later we'll look at some very similar price action casting a glimmer of hope over some of our leading stocks. What's the potential? We'll have a look at that a bit later on as well too. Okay, so let's first go to the top 10 trend intensity rankings for the week. And first off, we've got Aristocrat at the top. It's a little bit of a surge of interest to Aristocrat. IAG is doing well. Aurora is now starting to rally quite strongly. The Lottery Corporation, which you can see there, starting to break to new highs again. And we've been a bit patient with that one, but finally we're getting some rewards, I think. Boral's been doing well. BRG's a break up. BSL and Cara doing well. Fang's doing fine. And Flight Centre just a recent entry, but also doing okay there for the moment. So that's the top 10 intensity rankings for the week. Let's go to the overseas markets now. First off, the Dow Jones Industrial Average. Again, we can just see we're right in this little zone here now. Could be trouble, could be good. It's a bit hard to tell, but certainly it's stopped for the last couple of weeks. So it's just hovering there above those, just below those highs. We've got some, a fairly good strong rally into here with good volume in here. But we're very, very wary. This is an all-time high, so we do have to be careful. So that's what the index looks like there. The S&P is a little bit similar. It's raced ahead pretty quickly towards those highs. It's not far away. We've had a dip the last couple of weeks and not a lot of selling at this stage. As I said, the buying forces are quite strong across these indexes. So that's probably what we favour for the moment, still maintain this uptrend that we're there. And the Nasdaq is the same pretty well. It's had not such a bad 2 weeks, but again, it's gone up for a lot of weeks in a row without having any pullbacks at all. So this is probably not a bad thing to happen for the Nasdaq. Okay, so those indices look okay. The commodities aren't really telling us much. Copper is still falling. Last week, its downtrend seems to be reinforcing itself there. Gold is just tottering still at that same place around 2,000 or just below it, and we're not too sure yet. But the longer it doesn't get through there, sooner or later these sellers are going to hit this market. But anyway, we'll just have to wait and see if it can get through or not. And Brent crude, well, it's levitating a little bit. It's had a nice little rally the last couple of weeks. It's trying to shirk off this downtrend. Hasn't really done that yet. We've got some interesting signs, some constructive signs, but not really enough evidence to say we're going to turn in trend just yet. So that's Brent crude at the moment. So that's the commodities. The S&P ASX 200. As you can see, very similar picture to the Dow, really. Excuse me. It's got these many highs over the last couple of years up there that we're getting towards. But, we've had some furrows up. The week hasn't finished on its highs by any means. This is turning a little bit positive if we want to sort of clutch at straws a little bit. But really, this is really the area we want to see this market get through. It's going to continue on. Okay, so that's the ASX 200, what it looks like. The stock pick count, again, really when we look at this, we've got 47 of 185 stock picks altogether, 37 stock picks of 161, 10 ETFs of 23. Now the 37 stock picks of 161 does say breadth is pretty bad. And has been for an awfully long time. Yet our market is up near its highs, which means the driving forces of that index are keeping it up near its highs, which is basically pretty flat for the most part. There's a couple of good stocks in the leading stock that are moving high, like WiseTech, but generally they are going sideways. So it's interesting, we are up near those highs. We've got very weak breadth, not a lot of leading stocks really doing much at the moment. So opportunity or worry, well, whichever way you want to look at it. Is how you should take it. So anyway, so that's what the stock pick count looks like. If we look at the portfolios as well, similarly, picture we've got a few, we've lost a few here. So we've got 3 and 5 of this 5-stock Energizer, the big one, 6 out of 10 for the 10 stocks, so a few off there. And then also these two more recent ones are both down to 3 out of 5 as well. So strange as it may seem, that's an unusual thing if the market's strong. So we just really have to be guided by what the portfolios say, what the indexes, what the stocks say. So we stay out of a lot of stocks and we're in a few. We're being very wary because this is it's quite an unusual situation where the energizers aren't full. Okay, so that's a portfolio update for now. Okay, let's get into some stocks and have a look at those. Rightio. Okay, look, we talk about big opportunities ahead, and I'm talking about the big trading ranges on a lot of these stocks on the amongst the leading stocks. We've got the miners, which are doing it generally, Fortescue, Rio. BHP still got an upward slant, but it's really got trouble at the $58 area. We've got a lot of the banks all chopping sideways, CBA, ANZ, and even some big trading ranges that we haven't really looked at yet. CSL, Macquarie Bank, Transurban, Rio, in trading range, been stuck there for a couple of years. What are we going to see now? So, well, if we have a look at it, we go to Commonwealth Bank first and just have a look at this long-term chart. Well, it's not a long-term chart, it's the last couple of years, and you can just see it's just been going sideways between 90 and 110. Really telling us very little. We can look at all sorts of things down here, but in the end, we really need to see this area break up here. So we've got a long consolidation here. It's not out of the realms of possibility this can break up. The banks can move when they want to, so we can just have to wait and see what happens here. But trend intensity rating of -4 for Commonwealth Bank, so still a little bit wary. But really, this is what we would really like to see on a bit of volume. So that's the opportunity for the Commonwealth Bank at the moment. We look at Rio Tinto, a similar thing where it's gone in a trading range for a good couple of years there. Can't get through 130, seems to get support at 90, so we've got this $40 trading range dominating the market. We've got a higher low here, which is a good sign. It may have another shot at R1, but for the moment we're still stuck in this trading range, and again, not a lot of guidance here. There's still plenty of selling there, and this is pretty flat. So, the opportunity, as I said, not really while we're in the trading range. Once we get out of this trading range, that's what we really want to see. And you remember the longer term trend of the stock market is up, so it's quite likely these are going to break up at some stage. Okay, let's go to Woolworths, a stock that I haven't really been involved in for a long time, because I just haven't liked the look of this chart at all, because it's been very, very up and down, very, very choppy, a lot of strong downward moves here, strong upward moves, and it's all stuck within this range of about $43 to $34, $33. That's all this event's happening here. So this really is the trading range for Woolworths. That's really what I'm looking at the moment. Even a break up here, we've got 1, 2, 3 stops, is not going to attract a buy here because we've got too much resistance above here for Woolworths. So taking a step back, look at the long-term view here. Woolworths is in a trading range until it breaks out of there. And it's a -4, just like CBA. Until it breaks out of there, we're really not very interested in that. So we just have to be patient there. So there's a couple of stocks for you to look at on a trading range basis. And amongst the leading stocks, there is one bright star on the leading stocks, and that of course is WiseTech, which just goes from strength to strength to strength. Even WiseTech's had some big corrections along the way, 74% here, 40% here. We've had some very good trades for WiseTech, and this last one we bought here about $60 is now about 88, so it's looking quite nice indeed. So there is a star there. There's another star that we're going to look at in a second called our Aristocrat, which amongst those sort of bigger stocks is doing very well. But generally in that group, we're stuck in these trading ranges and we're just waiting for the breakouts to happen. So we just have to be patient and wait for that sort of thing to happen. And trying to look for what's going to happen internally inside those trading ranges is a very difficult thing, especially when you see charts like Woolworths that have been jumping up and jumping down. It's dangerous. And there's no trend in place. So when there's no trend in place, we just don't play. So that's what we're doing at the moment. So firstly, what we're going to go for, first trend reversal. Again, James Hardie has had a really good week this week. It's up again. Okay, so James Hardie here. So we had a beautiful trend reversal down here. Downtrend, accumulation phase. Trend reversal here, high, low, breaks above the high here, kicks above here. We didn't buy it till up here. That was a strong week, but that's the way it is sometimes. But we are now starting to get a few profits under our belt here. James Hardie is rating at trend intensity rating +9. Simple reversal of trend, good volume, good momentum. Up it goes above the average. So trend intensity rating is +9 and looking strong. And there's no reason why R2 can't be challenged at some stage. Knowing the behaviour of James Hardie, it trends very well, both up and down, and it looks like it's on the upward slide at the moment. So that's the James Hardie one. So for trend reversal, we've probably got 4 or 5 good prospects at Stockradar at the moment there that we're looking at. We saw Breville Group break off last week. So we'll see how that develops there. We've also got one little forgotten hero here, which hasn't attracted a lot of attention, but it's doing very well for us, which is Magellan Global Fund, which had a nice little trend reversal down here. Low point, high low, trend reversal through here. Breaks up here, the trend turn. Then we get all this beautiful volume here and beautiful momentum pushing this stock ever higher. So it's up about 12 or 13% since we entered that one. in about 4 months. That's not too bad. So Magellan Global Fund, boring as it may be, is doing very nicely, and we're making a bit of money there, so that's good. Okay, so that's the trend reversal I want to look at today. As far as the new highs goes, there's a few happening at the moment. The one we've got here is Aristocrat. It may look like a trend reversal, but it's not, but because I did actually take a trend reversal sign back here in November, which was stopped out pretty quickly in December, and that's when we're just wearing our sleeve. But then we got a reversal back up again, and it broke up to new highs just around here there, and it's now starting to move on nicely with trend intensity +8. Bit of green bar starting to appear, so we're still a bit tentative, but we're sort of liking what we see as far as positiveness goes, and trend intensity rating +8 gives us a signal of Aristocrat. And then you've got $48 again, another stock like James Hardie that tends to trend very well indeed. So useful knowledge. Okay, so that is Aristocrat. There's plenty of prospects for highs at the moment, whether it be Woodside, Pilgrim Mines. I've got a whole list of about 10 of them there that you can see on Stockradar that are looking ready and ripe to make some new highs. And one that's just made a new high again recently was a Lottery Corporation. And this is, one of these stocks, I talk a little bit about these new listings, demerger stocks, that they start off and they move either up or down, find a bit of value, then start trading in a range for a while, and then we look for the breakout. So I'm going to look at a couple of stocks in a minute, a couple of new stocks that I'm covering in a minute. But this is the Lottery Corporation, and this is its trading history. And so it had a little bit of a sideways range for a while, simply broke up here in a trend reversal pattern here. So we've been hanging on to this one for quite some time throughout all this. It hasn't really been done much. It's had a few dips up and get back bang down again. But here we've now starting to get through this 522 area, which was the old high, and starting to look pretty good, and some good volume there and good momentum. So the Lottery Corporation is a new listing. The market's starting to get a bit of confidence in it. A little bit of yield there, but it still looks quite an interesting stock for me, and it is making new highs. So that's the Lottery Corporation, one worth watching. Okay, now let's say two new stocks that I'm covering. I think I knocked out 5 stocks for the end of June this year, and I added in. So I knocked out 4, added in 5, and this is 2 of them, 2 of the new ones that have come in. One is Ventia Services Group. Okay, so if we just look at how this started off its trading range, it started on an uptrend here, which it broke, and then, as I said before, these stocks tend to go into trading ranges where investors are a little bit uncertain, but they're just trying to work out the value of the stock, and then finally we get a move down to the lows, we get a move up to the highs, we're in a trading range. The sellers have started to hit this. If I just blow this up a little bit on Ventia Services, you can see that there is some interesting buying coming in through this here. We do have some selling at the moment, pulling it off the high, and that's not surprising. We're not doing anything at this stage until this high breaks here, okay? Because that's the setup. That's the new high setup that breaks to the high, and that's for Ventia Services Group. Again, as I said before, it's on the up. Volume's been okay. Got some sellers here stopping it, and momentum's quite good there. So a break would certainly attract a qualifying trend intensity rating for Ventia. In this instance. Okay, the other one I look at is GQG Partners. Again, just done the reverse, it trended down to start with, then went into a sideways trading range, which it's still in at the moment. Trend intensity rating is +1. As we're in this range, it won't change too much while we're in here. But we are at the higher side of it at the moment. We have got some very good volumes that's pushed it up through here, and momentum is positive. So a break above here, which would be a trend reversal. This is a downtrend, so we're reversing a trend. This is a trend reversal setup. For a break above here is a clear signal that this stock may go higher again, and the market's got a bit of confidence in what it's doing. Okay, so that's really most of the stocks I've got for you today. Look for those trading ranges and those big stocks. We're keeping an eye on those sort of things. Some are close, some are not. Cochlear is quite close. There's quite a few of them. You can look through a lot of these. CSL, which is right at the bottom of its trading range. So they're all in various situations, and all will fire off at different times. So just keep an eye on those, because even CBA is quite close at the moment. So and Rio and BHP. So they were certainly worth watching for the moment. So that's all I've really got. Just mentioned on Ventia and GQG. Both have got yields over 5%, which is always an interesting little bonus to have when we're carrying these stocks. Okay, so now I want to go into quick trading tactics. Not a lot today. Just really want to talk a little bit about. Come across come to my attention about people talking about how they like this stock or they like that stock and done well in that stock. It's very difficult. So falling in love with stocks is not such a good thing sometimes. You've really got to try to be very discerning, very strict, very rigid, very disciplined, very objective. All those things you need to do rather than falling in love, and that's a very emotional thing. So be prepared for any event. Don't be wedded to a position or a stock. So as far as a position goes, often we are slow to respond to changing trends. So we're making some money and we're hoping this market's going to go higher and higher, but there are obvious things showing us that the trend is changing. Okay, so we need to be observant in that. We need to be able to identify that and act. And whatever it is, you must use some sort of parameter that says, yes, we've broken down and I need to take my profit. So that's just for positions. Don't fall in love with the position. It's not always going to go high. It's going to turn at some stage, okay? But be smart. Ride the trend as hard as you can. Okay, if it's an actual stock itself that you perhaps made money on before and you think you're going to make money again, well, that's what they call anchor bias. And that's really a lure of past success. And that can be a little bit of an emotional trap. So it's a matter of staying focused in these situations and seeing what you see, reacting to what you see, not what you think. Or what you want to think. Okay, so that's just a couple of little tips on falling in love with stocks and positions. Don't do it. The whole process that I drive is being disciplined and being very objective, and that's what we need to do all the time. Okay, so that is about all I've got for you today. For now, I think the newsletter was out last week. Okay, that's about all I've got for you today. So trading ranges, keep an eye on those big stocks. There's some big opportunities coming along, and there's some big trading ranges which foretell of big moves. Okay, so that's the exciting part of it. Falling in love with stocks, don't do it. Falling in love with positions, don't do it. Be very careful. Okay, look, that's all I've got for today. I hope you enjoyed it, the show. Some interesting stock ideas for you there. Stay safe, watch your trends, give me a call if you need to, and I look forward to seeing you all next week. Thanks very much.